Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Bull versus Bear webinar. Steve Miley on the call for TradeDay.com. Welcome, everyone. We're going to go through usual regular run through here today. Calendar, what we've had, what we've got coming up. Articles from the major news wires. What are the macroeconomic, fundamental, geopolitical factors impacting financial markets right here, right now? Quick look at the charts to see what's interesting on the charts, if anything, apart from stocks are going and stock indices are all going up and they continue to go up. And I don't see how you can be anything but bullish as you look at these charts most days. I mean, obviously, intraday things happen, but I mean, looks pretty bullish to me. Okay. Let's look back before we look forward. Yesterday, obviously, all focused on CPI. So pretty much in here, in line with expectations on the this kind of the core data in here. So the core data coming in 0.4 on the month for May and 5.3 on the year for May, bang in line with expectations. But then the actual CPI number itself, not the core number in here, came in better than expected in here, 4.0 versus 4.1 and 0.1 versus 0.2, so slightly better than expected. So that's certainly on the plus side, on the positive side of expectations. I think, if we go and look at the CME tool, remember when we looked at the CME tool yesterday and this week, this has been hovering around 70 to 75, creeping up. And obviously yesterday it leapt to, well, not obviously, but it's leapt to 95. Why has it done that? And I think we had a question yesterday, if there's an off chance, that the Fed do hike. Well, the reason it was sitting at 70, 75 was because there was obviously a chance that the data here, if this data had come in slightly hot, then the Fed may have hiked, right? Kind of stuff today, but the fact is the data didn't come in hot. It came in slightly cooler than expected. And so in here, we see this leap up to 95 now, because there's hardly any chance that the Fed are going to hike rates now. So certainly a shift in that. So it'd be a massive surprise if they hiked rates, and pretty much they're not going to. Okay. I've been harping on about this, and I just do want to make this point. And I know you're day trading at Trade Day, and I know a lot of you are very short-term trading, but I think it's going to be a really interesting summer. I think, even though I've been saying this week's obviously a big focus, CPI yesterday, Fed today, ECB tomorrow, Bank of Japan on Friday. 2 weeks ago, we had the debt ceiling, and then we had the employment report. But I think it's really important going over the next few days and weeks in here, what we see coming out of the Fed and what we also see coming out of other central banks globally, right? So do pay attention to the other stuff. I'm going to obviously cover it here on the webinars, but it was really interesting, the kind of this shift we had. I know I've mentioned it a lot in here, but from the RBA and from the Bank of Canada, the Reserve Bank of Australia and the Bank of Canada last week, who had started to shift more dovish and came back more hawkish. What we're going to see from the ECB, we've got Bank of England coming up, I think, in the next couple of weeks. It might even be next week. What we're going to see from the Bank of England, how are other central banks seeing, because remember, this is all connected, right? It's a massive global economy, globalization and all of that, and, prices are up everywhere and then prices are coming back down. Okay, at different rates and, different interest rates moves and the speed of, inflation in some areas. We've still got very high inflation here in the UK. Food prices are still rocketing higher here in the UK, I can tell you, because my weekly shop goes up every single week. Ridiculous. But and we've still got energy prices very high here in the UK. So there's different inflation rates all over the globe, and so different central bank approaches to this. But I think it's going to be really interesting from the Fed. Remember, Fed have been blackout. They come out of blackout. The other thing I wanted to just spotlight today is we also get the dot plot chart. Now the dot plot chart, this was the last dot plot chart. I'm just going to see. I was just speaking to someone else about this. How regular are the Fed dot plot chart? I think they're quarterly. I think they're 4 times a year, yeah, I thought so. Quarterly, okay. So the dot plot chart comes out quarterly. So the last dot plot chart we had in here, okay, was at the March meeting, okay, from the March meeting. And here we had from the March meeting. And if you don't know the dot plot chart, this is probably the most important part of the dot plot chart. It's the one you always see. And yeah, let me make this a little bit bigger so you can see. And basically, this is what the Fed. So they just basically each member of the Fed, each one of these dots is from a member of the Fed, okay. So they literally put a dot. So each one of them has one of these sheets, and they'll each go dot dot dot. And this is the amalgam of that dot plot chart, right? Okay, so this is what it adds up to. And you can see in the March meeting, and this is then 2023, 24, 25, and longer run. So at 2023, this means at the end of 2023, where do they see rates? So at the midpoint of the target range, yeah, at the end of 2023, to the end of this year, at the March meeting, the consensus was all here. The midpoint of the range, and the midpoint you can see 500 to 525. Where are we right now? 500 to 525. So they saw rates at the March meeting being where they are right now. Okay, now at the end of the year. And what are we seeing in here from at the end of the year? December, the December meeting. What's the most? 500 to 525. So the Fed got it right. The market is listening to the Fed. But, between now and then, what the market is predicting and what the Fed are telling us might happen is, even though June is unchanged, 94%. July rate hike 525 to 550 by year end, back to 500, 525, but maybe still at 525, 550, maybe even higher, right? But the consensus is 500, 525 or below. Okay, so we're looking for up 25, down 25. So that's kind of sits with the dot plot chart. But then looking into next year, look, the dot plot chart, even though the more hawkish members up here saying, look, still up in the fives, right? Consensus is down closer into the low fours, even as low as into the threes, and then the year out even further. It's going to be really interesting. We're going to get the dot plot chart. If we go and take a look at the calendar for today, this is looking back to yesterday. Look at the calendar for today. What do we see in here? Where is it? Where is it? Where are we? Where are we? Da, da, da. So we get the FOMC statement. We get the Fed interest rate decision. So what are rates going to be? And, we're expecting unchanged, 500, 525. We're going to get the statement, so are they going to change the statement much? Are we going to, usually just literally a few words change. One sentence changes in that statement. Okay. What statement? But we're getting the economic projections. That there, economic projections, is the dot plot chart. 2:00 Eastern time. Remember, no trading 2 minutes either side. Nothing in the order book 2 minutes either side. We will hit the foul button. You will foul the evaluation. Please don't do it. Please don't do it. Please don't do it. Yesterday, another dozen people fouled for having stuff in over CPI data. The rules are there. We can't put them anymore. Whether put them everywhere, email everywhere, anyway. So yeah, so please don't do that. But then the press conference, fill your boots, do what you want through the press conference, right? It's only 2 minutes either side of 2:00. So 1:58 through to 2:02. After that, you do what you want. Okay. Anyway, so the dot plot chart is going to be interesting how that comes out. So there's kind of a lot of information coming out at that 2:00 point to be digested by the market. So it's going to be choppy, right? Because we get the dot plot chart as well as the statement, as well as obviously the decision as well. So we're going to get all of that coming up. My feelings are, there's a really good article. One of my colleagues in here. This is this is a site that I own. FX Explained. Got a colleague, Richard Perry, wrote this. I really like Richard, good analyst, technical analyst, and macro analyst in here. He's going to expect what he's calling a hawkish hold. So he expects them to go on to hold, and he expects a hawkish hold. And look, the Fed is on pause, but tough talking will do the heavy lifting for now. I think he's right. I think the Fed will stay relatively hawkish. They're not going to want to say to the market, we're done. If they say to the market, we're done, stocks will start rallying away. The market will love it. Okay, they don't want to encourage that in case they need to hike again, because then that can cause an issue, right? So they don't want to do that. They're going to do, I think this hawkish hold, I think we'll stay there. But it's going to be super interesting. The dot plot chart. It's going to be super interesting. The tone in the statement. Is Powell slightly more dovish? He's pretty much in the middle. But if anything, he slightly sits on the more dovish side. Be interesting to see what he says in the press conference. It's going to be super interesting to see the minutes. Now, I'm pretty sure the minutes come in a week's time. The minutes are usually Fed minutes release schedule. I think we get the Fed minutes a week later. Okay. So June meetings. Yeah, we know meetings. Where's the minutes? No, doesn't say. And minutes. Can anyone see that? I don't see it. Pretty sure it's a week later. There's the meeting. Yeah, it says, look, meeting says with summary of economic projections. That's when we get the dot plot chart. So the next one will be the September one. I don't see the meeting. Oh, FMC. No, these are just meetings. No. Okay. I'm pretty sure the meeting minutes comes out next week. Okay. We'll go and take a look at that another bit. But anyway, what I'm trying to say here is I think it's going to be super interesting, those minutes, right? You're going to have hawks. We're on pulls. Usually we're going into what has come often the quietest time for markets going into the summer, right? We're in the early summer now, but I really think markets could stay quite volatile right the way through the summer because we're going to get a lot of indecision about are we finished, not only on the Fed, global interest rates, are they finished going up? Are we going to have further hikes from the likes of from the likes of the BOC, the Bank of Canada, from the RBA, from the Bank of England, from the ECB? You're going to get this disparity between central banks. We've got hot inflation in some places, inflation slowing in other places. Okay, it's going to be really interesting. So, yeah, I think we need to really be watching. Fed speakers are going to stay really in focus, even more so than more recent. Yeah, more recent, we've known hike, right? Now we're on this pause. Is it pause and hike, pause and cut? It's really indecisive. Is it going to be pause, hike, cut? That's what the market's pricing in, right? Pause, hike, cut, right? So we're going to see, right? It's always interesting around these turning points. So, yeah, I know I'm labouring the point in here, but anyway, some other articles here. Fed still waiting on core service price cash. So, what they want to see is these core service prices coming lower, and they're not seeing those. Okay, so that's what keeping them in this hawkish place, right? That's what's keeping the Bank of Canada, the RBA, saying a persistently strong economy. The economies are staying strong. This is a great article. If you don't read anything else, just have a run through this, right? I think this is really good. Just looking back, this is what the Fed look at, right? This is, if you don't look at your macroeconomics and data, this is really worth looking at. Just running through what the Fed is interested in, right? What's it interested in? Inflation data, obviously. It's interested in the jobs data. It's interested in the job openings data. It's interested in the retail sales data. Okay, it's just running through the major things and what's been going on, and then the Fed speak, right? What Fed speak about? This is just looking back. What's got us to here today? It's definitely worth going and taking a look at that article. 5 things to start your day. Nothing really. Decision day, we know that, right? Trump hearing doesn't impact the market. Microsoft Activision not bothering us. Markets are fairly positive after a really good session yesterday. Fed poised to punt rate hike into the summer wind. I spoke to you about that article and I've shared that. Stocks edging higher overnight after a really strong day yesterday. Trader position for a Fed pause starting unwinding. Already spoken about that. The Nikkei went higher again to another new multi-decade high. The Nikkei this morning added in another 1.5%. It's super, super strong, outpacing elsewhere as well. Europe's up this morning about 0.5 to 0.75%. The European exchanges and the US stock futures are slightly up between, about a tenth up, 10 to 2 tenths up, having had a decent day yesterday as well. We've already looked at that. Bond yields, incidentally, I think this is really interesting. Bond yields going back up to recent highs. And if we go and take a look at, I've got the actual on here, the bond chart. The 10-year bond broke below recent lows. So this is particularly remarkable. So that we've got a real shift in here. Remember, last time we were down on these lows and we were worried here, stocks were looking wobbly. Now stocks are looking super strong as bond prices have gone down. So we're getting stocks going up, bond prices going down to lower yields. So it's particularly showing some real strength in the stock indices, given that we're going higher in stock index prices, given the push lower that we've had in the bond market prices, higher yields, bonds, and that's the 10-year. There's the 30-year, not as negative on the 30-year, but you look at the 5-year, negative as well, and the 2-year as well. Okay, so this is echoing a more hawkish potential, more hawkish tone, concerns about the economy, but stock indices going higher nevertheless. Right, really, really telling in here, super, super telling in here. And I'll come to your questions, see the questions in there. I'm not going to really go much into the stock indices. I know you're all trading in stock indices, but what more can I say? Since we've broken out, we went sideways last week, up, 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 up again this morning, again in here on the S&P 30-minute chart, up again this morning. Oops. Sitting right on the highs. NASDAQ in here equally strong, sitting on the highs, just up, up, up. Right, questions, loving it. What are your thoughts on China's economic slowdown affecting? Yeah, I think it will, Jack. I've been going on about this for a while. I think it could have an impact. I think what it's actually showing you is that, the China's the factory of the world, right? China's slowing. It's seeing deflation. This could go two ways. Is it showing you that there's a lack of demand, or is it showing you that we're seeing kind of a little bit of a contraction, and that we could actually see, this will be a real positive. China, if we get a slowdown in China and we see falling prices out of China, right, we could actually see deflationary pressures. So that could actually help lower inflationary pressures around the globe. The problem is the global, it's not so much the manufacturing. Obviously, China's factory, right, manufacturing. Okay, the problem with a lot of the high prices that we have, the inflationary pressures, they're coming through from food, and they're coming through from energy. And the other big problem that I mentioned yesterday, which we really have to, there was a good article in here on Bloomberg, I'll re-find it, which are El Nino. El Nino is the other problem. Okay, food prices are going up again in here. Okay, this, I'm going to reshare this. Hopefully everyone can get that. But food prices are going up again globally. Okay, because of this. Okay, so this could be another factor as well. So I know it's separate to the China, but a lot of the China deflationary pressures we're not seeing coming through into Europe and into the US and to the Asian economy, because it's a lot of the driver, the higher prices we're seeing, is coming from food and coming from energy. Oh, ECB tells banks to leave Russia quickly. Oh my. Is that ECB? Sorry, who's? Sorry, there's no name on it. It just says good morning. It does say ECB. Sorry, I see. He's got it there. ECB. ECB. Is that just breaking news? I wonder if they know something. ECB banks to leave Russia. Do you have a link on that? Oh, this was from yesterday, June 8th. Blocks top supervisors and energy making a raise, but it's called to wind down operation more. Yeah, I think it's more generic. ECB urges banks to, I see that. But why quickly? Well, I think there's real fears that, from what I've read recently, okay, on that whole side of things, okay, there are real fears that Putin's not going to be there for much longer. If this counteroffensive works from Ukraine, and it's not going as well as they thought it would initially, but the counteroffensive started about a week ago. If this counteroffensive does well, I mean, Putin for the first time was on the media yesterday saying we've suffered heavy losses. He said that, which is really rare. And we don't have good technology. He actually said that, showing some cracks. Okay. He could be gone really quick. And I think that's maybe why, because there's going to be a power vacuum. Whether it's going to be positive or negative, that's another matter as well. I mean, that's a whole new minefield we've got down the road, right? That's coming one way or the other, right? That's going to happen. It could be really positive. We could get a more moderate, but the chances are initially you get something far more, even worse. If there is something worse, but there is. That's another whole new mind years. I hope that answers the question anyway, Jack. I'm going to wish you all a great trading day. If there are no other questions coming through, please do type them quickly if you want to ask a question, or just say quickly put wait Steve and type your question. But otherwise, I'm going to wrap it up there. Wish you all a great trading day. Be careful through the Fed. Remember, nothing in the order book 2 minutes before or after the Fed decision. After that, you can do what you want. Don't worry about the press conference. It's not related to the press conference. It's only the Fed decision. No trading either side of that. Sorry, I'm thinking of my times in here. Where are we in here? 2 o'clock. Yeah, 2 o'clock Eastern time. 1:58 to 2:02. Nothing in the order book. No trade anything. And then after that, do what you want. Okay. And yeah, have a great trading day. Take care, everyone.